Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 27th of August, 2019. We're about 3:25 p.m. Central Daylight Time, which means the market's going to reopen for 30 minutes in 5 minutes, 3:30 p.m. This will end up being where the settlement price, though, is in the stock indices, and as you can see, they're down. For those of you that get access or have access to my written commentaries, last night I wrote, be on the lookout for Tuesday reversals. When you get strong moves in the financial markets on a Monday, directional move, often Tuesday ends up with a bit of a reversal, especially in front of holidays, and you've already got holiday thinking going on. So to see the stock market pull back, doesn't surprise me. To see the gold and the silver strong, no surprise. Bonds and notes. If you were watching today, you're seeing that curve yield is still getting nasty as can be. We keep breaking the yield in the 10-year note down hard. The market is thinking slowdown in world economies, and money's rushing in and pushing yields down. The rally in the energies today probably more related to Iran and their president coming out and telling President Trump through the press, of course, they don't talk, yes, we'd be happy to meet with you once you take off the sanctions. I don't think that's going to get anything done. So the market came back up because yesterday it said, well, you know, there's an olive branch out to Iran. Is oil coming back on the market from them? Let me assure you with that response from them, well, I can't assure you, I'm not in politics, right? But I can tell you that isn't the response that's going to get these two men together. So let's go to the charts and see what they're offering. On the S&P, I don't think you can disagree that we've been in a correction. And you see that on a closing basis, this is a weekly area chart of just closes. When you take a look at this action, you can see the choppiness that's been developing. You can see that the market still has the pattern of a higher high and a lower low. That's been around here now. The market fell yesterday to the 200-day average, rallied back today, and this was the interesting thing. I think I said this yesterday. Watch out. You've got two levels of resistance above you, the 18 and the 100-day. You're not trending. You went today to the 18, and then you fell back and finishing off 17 points on the day. In terms of Bollinger Bands, which is a possible objective, you hit it, you bounced away, and now you came back from that 18-day average. Remember, that 18-day average I call the line in the sand. It's so often a key number that markets look at as they come down to it for support or rally up to it for resistance points. In looking at momentum, it's still pointing down. So what I see here is a chart that, number one, if you have an inside to a lower day tomorrow, either one, just don't take out today's high, the swing line's going to turn down with lower highs. You already have lower lows. You could put into play that 200-day and the 18. In order to change that, you got to go back through this high way up here. I don't know if you can get that in front of the holiday period. When we come to the NASDAQ, I'm going to come back to yesterday. You got up yesterday to a high of 76.26. You hit the 18-day average, which means this to the 100-day is resistance. You tried to reach a little higher today, couldn't, and you ended up settling lower. The pattern here is a higher high, lower low that has already hit one of its downside targets. Might have been it, I don't know. Back and forth action did not make it to the 200-day average right through here. When we come to the Dow yesterday finished off having hit the 200-day and the lower Bollinger Band, did not get to that 18-day average. That's where I'm going to be looking for resistance coming in. The market hits it and falls back from that rather sharply. Momentum still down. These charts are not, they're not trading patterns. I don't know how to describe it. It's almost just whipsaws back and forth at this point. When we come to the Russell, the market is fighting at the lower Bollinger Band. All of its key averages are well above the market, and we just had a bearish another move. We had the 200-day average get under the 100. The 200, I said this wrong. The Bollinger Band get underneath the 100-day. The 200's right here. So the Bollinger Band is what I was trying to say, is racing down for these moving averages right now. If the market could find support in these Bollinger Bands, you might narrow in the trading range even more. In the VIX, the market is fighting at the 18-day average of closes. The pattern is still one of lower highs, lower lows, but with the settlement over the 18-day average, the bias is up, which negates the impact of the swing line. Momentum is pointing up as well. In the T-bond market, first thing my eye goes to is you're overbought. Then I look for the pattern. I've got a lower low and a higher high. Visually, I can see the market staying over the 18-day average, so I realize the bias is up, but does that make for a good trading vehicle? I'll leave that up to you. In the 10-year notes, overbought, came back to the 18-day average on that contra trend move, kept the bias up all the way through this, just like you saw in the T-bonds, and resistance, the upper Bollinger Band. TLT. Didn't quite make it to the 18-day average. Overbought, higher high, lower low pattern. I don't see trends here. I see bias. Bias is to the upside. That's not the same as a trend. In the dollar index, choppiness now at the 18-day average of closes. We're almost defining this as a current trading range where momentum has flattened out on us. In the eurocurrency, the market had 2 days of a run at the 18-day average of closes. The pattern has not been bullish. You had a lower and low, higher high, and you pulled back today. Don't know, again, what to do. I'm not seeing trends is the right way to say it. I can see downside bias, but I'm not seeing a trend. In the British pound, I see an uptrend. The market's got higher lows, higher highs. Admittedly, it's had stiff resistance at the upper Bollinger Band in an overbought condition. Plus, you have the dilemma of Parliament returns September 3rd. What the heck's going to happen? A lot of people think they're going to try to band together to stop Boris Johnson for his October 31st pullout with or without a deal on Brexit. I don't know, but it's a major report event. That's how I consider it. Parliament comes back, their first rule of order is not going to be small things. They're going to try to put their hands around what's going on. In the Japanese yen, the market had its rush yesterday to the upper Bollinger Band, fell back, went to the 18-day average, and it's hanging right there. I mean, that's what's going on. You're out of a trend, you got a lower low and a higher high. I want you to think Labor Day. That's the kind of markets we're in. Got markets that aren't giving you clean trends. Bitcoin's still in a downtrend, lower highs, but I see higher lows. I don't know that it's a downtrend. I'm going to take that back. Lower highs and higher lows is no trend. It's a market that's narrowing itself in. The bias is down because you're under the 18-day average, but you are now in oversold territory as well. Next, we get back to the Brent versus the WTI crude, and I realize this is October Brent, and I'm going to be leaving that soon. I'll probably put up November Brent versus November WTI. I'll make my decision tonight or tomorrow, maybe by Friday. But you can see all you did is have a deep break, rallied back in here and came back down to that 18-day average, and you're playing around that. But the bias is down. When we look at the Brent itself, you got lower highs. I guess you can argue lower lows, but now I can argue a higher low from that one. I'm going to call it trendless. Momentum, pretty flat, bias up. I'm going to stay with my idea. I don't see a trend right there. The settlement in the WTI crude, and I have not seen it, I haven't seen yet what they did with the API numbers, but I'm guessing the fact that the market's holding on the gains that there was a good draw. And the market looks as though it's going to settle over 54.70, which puts the bias up, but at the same time, the swing line's down. The two fight each other, you have nothing, and you have momentum going flat. Gasoline, the 18-day average is 153.61. You're at 154.67. You haven't taken out this past high of 154.84. The market is neutral here. It looks as though you're going to settle over the 18-day average with the swing line down. The two fight each other. I don't see a trend just yet. And in nat gas, drifting sideways in a Bollinger Band that is just drifting on you. I don't see a trend in this market whatsoever. I'm saying a lot of that, aren't I? No trend, and I think that makes sense because at this time of year, going into Labor Day, markets have a way where pros take some money off the table, they run to the beach, they finish up with the kids, the last vacations, and so on. Chicago schools start next week. I don't know about the schools in your area. In the suburbs of Chicago, the kids are back at school. what a good time to read our technical indicators. We have volumes 1 and 2. And in these volumes, you get displays of what they are, full explanation. I think the best description of them in a short basis that I've ever seen. And short does not mean skimpy. It explains them. It explains the basics. You can always go onto the internet and read more about them. It's going to give you a pretty good idea. To get them, go to our website, sign up for our free offers. You see that right in front of you. You can call my staff. They'll get it out to you. It's all by a PDF by email. Or you can click right up here, and they'll come to you that way. I'm Ira Epstein. You have a great day. I'll talk to you all first thing in the morning.